Ladies and gentlemen, welcome aboard the Pilot Money Guys podcast, where our mission is to help clients build and protect wealth to achieve their dreams and goals. This podcast is brought to you by Leading Edge Financial Planning. Without further ado, here is your host, Robert Eklund.
Here we go. Investment Newsletters, Flight 19. Folks, a tip of the cap to you. Thank you for joining us here at Flight 19 of the Pilot Money Guys podcast, where we cover some airline news and, of course, a financial topic. We aim to educate and bring some lighthearted financial fun to your day. I'm your host, Wealth Manager Rob Eklund, a.k.a. Rubber Mallet. Your flight crew today is the Godfather, Certified Financial Planner, and former F-16 fighter pilot, Charlie Mattingly. Welcome, Godfather.
Thank you, Mallet. Great introduction.
You're welcome. Flying in the number 3 tail and Charlie position is Mr. Cowbell, the Ben Dickinson. Welcome, Cowbell. Oh, I can barely hear it.
All right, I'll add that one back in.
We'll clear that up in editing.
Sorry,
post-production.
about that, guys. I didn't bring the
As we
cowbell
say in
today.
the biz.
Dang it.
As in the biz.
In the biz. That's what we're doing. This is a good one, guys. We got investment newsletters. This is going to be fun. A lot of fun.
That's right. Yeah. Robin, you sound like you're feeling better, which I'm really excited about.
I'm feeling a little better. I'm
You're
not
on fire.
100%, but I'm getting, 99.9.
In fact, you just need to calm down just a little bit. You're getting way too excited.
Turn it down. Hush it.
Turn it down.
Hush it, Godfather. You shut your mouth when you're talking to me.
Hey, did someone say cowbell?
Cowbell. All right. Still nothing, Ben.
Oh my gosh.
Aviation news. We're going to do a little obstacles the way on this one, as I messed up, and I'm going to apologize. Can't believe it happened, but
First time ever.
I know. First time ever. Don't tell my wife. Quick correction on the previous podcast. I called the T-38 an F4. I don't know what I was thinking. It was a slip of the tongue. Forgive me. It's the F5, of course, which was the Russian MiG in Top Gun.
Yeah.
Many apologies. So we're going to use that as our aviation news because we're going to tie it into what's replacing the T-38, which show a picture, Ben. Can you do that?
Yeah. Let me pull that up. I got it.
Pull it up.
Yeah.
We got it's being
This
replaced by
slick.
there it is.
There we go. Wow.
That was your
How do you
Bitcoin?
zoom?
So all of you
That's
listeners
awesome.
out there, we've got the Boeing Saab. It's an American Swedish. Eklund is Swedish. T7 Red Hawk. That's going to be set to be delivered in 2023 to replace the T-38. That's a good looking trainer.
That is nice.
Yeah. Look at this one right here.
Why do you need? Oh, yeah. That's nice. Look at that.
Wow.
Yeah, that's beautiful.
I want to go
The
back.
Northrop T-38 Talon was a 2-seater. It was the world's first supersonic trainer and is also the most produced. It's pretty cool, but it's going to be retired in 2023 or thereabouts. It began production, or at least it started the development. The development started in 1952. So it's about time to be replaced, I think.
Yeah.
Charlie, what do you got? You flew that.
I did. I flew that airplane. It was fun and pretty cool airplane. First airplane to go supersonic in. You went on a designated ride for your supersonic ride. That was so cool.
Boom.
Yeah, it was pretty cool. I'll never forget, one of my best memories was your first formation night flights. As a student, you're on the wing. It's at night. You're sitting on the runway. They push the power up, and all of a sudden you see a big afterburner to your left or right, whatever. And you're just, I was so stunned, like I got left behind on the takeoff. I forgot to push my throttles forward. I was like, this is so awesome. I love it. All of a sudden they're like, go, what are you doing?
I went to the danger zone.
I was singing, and I would like look in the mirror and do this little look here, like in the Top Gun.
What was your call sign? I should have asked you that. What was your call sign back in the day?
It was Woody.
Oh, from the animated cartoon there?
Probably something like that. Something, yeah.
Toy Story?
Oh, good.
Yeah.
Nice.
It was. I think that was what I got when I was in the F-16. Before that, it was like we have a couple different ones as you go through training. One of them was Baca, which I think means dumb cow in Spanish, if I'm not mistaken.
Dumb cow? I think
I earned that one. I don't know. My Spanish is not very good, but that's what they said. It's something about dumb cow. That was me, and then
smart cow would have been way better.
And I don't think I fit that role ever, though. That was appropriate.
Where'd you fly? Where'd you fly over
Say again?
on that flight? Where were you flying over on that flight?
Which one?
The supersonic.
Training?
The training.
Somewhere over
Mississippi.
man.
Yeah.
those lakes to the north of Mississippi. What are they called? Poinsett? I can't remember. I'm all
Welcome
mixed
up.
Hey, Ben, you flashed right before you put the T7 up there. You flashed something about the, was that
Oh, yeah.
Shiba?
Yep.
Was this a little
Shiba.
Bitcoin?
Oh yeah. So this is the new Dogecoin. It's basically this is also a joke crypto coin that was making fun of Dogecoin, which Dogecoin is a joke coin made up of making fun of Bitcoin. But Shiba, let me tell you, Shiba just passed Dogecoin and it's doing great. I think it's because Elon Musk got a Shiba Inu. I guess it's a breed of dog. And let me tell you, this thing is doing great. It's got a market cap of $40.7 billion, which is with a B, which is just wild. I don't even know. It's a little scary. I don't even know if I should show the year-to-date returns, but I'll put it on here on YouTube. Check that one out. It's a little scary.
I dare say Dr. Evil is the person who came up with Shiba.
Yeah, I think you might be right. It's doing great. I bought some today just so I could talk about it on this podcast. And let me tell you, let's see how we're doing here. Got about $100 worth. I'm down. Dang it.
Here's the kicker, Ben. Like you and I talked, and I said, okay, I'm in. I'm going in. 96 million% return in 1 year.
Yep.
I'm in, and I'll put $1 or $2 and become a gazillionaire. But how do I get my money back is what I want to know.
Yeah.
That's the trick. That's the trickery, huh?
Yeah. How are you just selling $96 million worth of your Shiba? I don't think first of all, it's going to crash the market, I would imagine. And then.
So this is real. It's not real yet. To me, in other words, I can't get my money back. Like you said, somebody, and I'm being a little bit serious right now because everybody's, hey, I'm going to put $10 a piece in all these. And I think I read today there's 10,000 different cryptocurrencies now. That
sounds about right.
So we'll look at that in a minute. I've got Nassim Taleb. Am I pronouncing that? Nassim Taleb? Whatever. We'll reference him in a minute, but really smart dude. That's the point. And so if I want to put my money in these things, I want to put $10 a piece in each one, and it goes up 96 million% in a year. I can't really get that back. I got to go to some kind of, that's the catch.
Here, I'll share this. This is some people are saying here, there was this NFT that was sold for $532 million. I think they realized it was actually just, it says it's a flash loan. I'm not exactly sure how that works, but I was reading about this and what people were saying was the guy couldn't get his money he put money into cryptocurrency. He's obviously a very rich person. And then he wasn't able to get it out. So he's converting it to all these different crypto-based assets to just try and get his money out. And I don't know. We'll see. I don't think you can get your money out if you put it in, though.
Yeah, so that's the catch, right? So this is a fake world of something weird going on that I can't explain yet, and not many people can either. But back to the article, Nassim Taleb.
There he is.
No, that's not him. That's the writer of this article.
Okay. Gotcha.
So this guy has written books, and man, Ben, would you Google which books he's written? I just escaped my mind right now. But he's a prolific writer. In fact, reading his books is a challenge because it is dense. Black Swan, a couple of other ones. And he's, so there's no, that's not what we're talking about.
Oh, okay.
Natalie Portman? No, not the same.
Very different.
Celebrity crush.
So here you go. You got it pulled up on the article that we read today, and it's pretty interesting. In Bitcoin, I'll just read a couple of the highlights here. Bitcoin has failed to become a currency because Bitcoin transactions are too expensive and too slow. I didn't know that. This article says that if you go to buy a cup of coffee with Bitcoin, it could take 10 minutes if it were a currency. It's not a currency now. But I didn't know I didn't know it was like that. I thought the whole point was that it was fast or instantaneous or whatever. Is it an inflation hedge? What happened in 2020? Did it protect anybody during the market downturn of 2020? This article says no. Yeah. And here's the interesting thing, and it's towards the number 7, 8, or 9. One of the goals with these cryptocurrencies is to get rid of the intermediary. And that's number 9. Bitcoin does not solve the agency problem of reliance on intermediaries. So that's one of the solutions that people say, hey, we need this decentralized money.
Yeah.
The problem is, he says, is every time you have in history or whatever, when you have an effort to get rid of intermediaries, the disruptors become the new intermediaries. In this case, it would be the people mining the coin. So the miners themselves, if they knew that all of a sudden this became the thing, now they're the new intermediary.
Yeah,
So
you got to get it from the miners.
Yeah, so that was an interesting thing that I didn't think about. And I'm not sure either, and this is me, not Nassim, I'm not sure either that the decentralization is really what we want in our money, even though a lot of times we don't want one entity, i.e. the government in our case, of doing things. It's one of the more trusted. I know that's laughable. Sometimes I expected y'all to laugh when I said trusted, but thank you, Rob.
Well,
it is the Fed or the government, whoever. We do need some entity that's somewhat trustworthy, besides a bunch of Bitcoin miners in their basement.
Yeah.
Some sketchy folks.
So I called the top. I called the top a couple weeks ago. I don't know if I'm still right or not, but
Oh no, I think you're doing great. You're doing great.
All right, thank you.
Nice.
Well, and just something on Coinbase and all of these different marketplaces where you can go and buy the Bitcoin. Me and the professor were just talking to somebody who was involved in the Mt. Gox, got all his money stolen back in the Mt. Gox crisis that we've talked about in the last podcast. We think Coinbase is going to survive. We think that they're doing the right things, but we don't know. We don't know what, like Gemini, that's another big one. We don't know if they're going to actually end up being able to last. Not to mention the problems going on with the stable coins it's just awful. I think Tether is a big issue right now. But anyway.
I like scroll up just a tad bit there. I love where it says he aims a minigun. Where does it say? Oh,
scattergun at Bitcoin.
And it's underlying database technology blockchain. Wow. Yeah, he's a smart guy. Again, not the guy pictured, but
again, and Black Swan is a great movie too. Great.
Check it out. Let us know what you think. All right, Charlie, what do you got on any other aviation? I know that wasn't aviation, but
that's right. Yeah, we couldn't resist that one. The other aviation stuff we talked about was just the interest in the new pilot hiring. It's just been insane to see airlines get rid of pilots, i.e. me, and then and lots of others. And now they're just desperate for pilots again, which is totally crazy. But that's the reality that we live in. So what are these programs? A lot of our clients, kids, a lot of people are saying, my kid wants to fly. How do we do this? What's the best way to do it? And almost every airline, I know I looked into United, I looked into Southwest, maybe, no, I think Delta has one too. Southwest is called Destination 225 Pathways. So what are these things? Basically, you go to some training out in Arizona for Southwest, and it's part of, they have a partnership with CAE, and you do flights and simulators. Then you go work for 4 years somewhere. But if you do all that, go through the programs, then you have a chance to become a Southwest pilot or a United or a Delta pilot, depending on which program you go through. So there's some that are like college, where you go to school, you get a degree, you then become a pilot, or you skip the college stuff altogether and then just go straight into the flying program if you get accepted. There's no flying experience required, but I think the program for a year or so could be, if I'm not mistaken, 80 to 100,000. So the other thing that we looked up for one of our clients was, can I use my 529? We checked into that, tried to dig a little bit. I don't have a definitive answer. My guess at this point would be no, that you cannot use 529s for some of these Destination 225 programs. And it basically has to be an eligible education institution in the eyes of the IRS. And in fact, on the website there, especially for Southwest, or specifically for Southwest, I should say, it says you must demonstrate the ability to pay out of pocket or secure financing for the total amount of the program. So in fact, then they start to advertise Southwest Federal Credit Union, blah, blah, blah. So let's see, IRS website. Here's the IRS website language. An eligible educational institution is a school offering higher education beyond high school. It is any college, university, trade school, or other post-secondary education institution eligible to participate in a student aid program run by the U.S. Department of Education. So according to this IRS.gov, a program you can use your 529s for that program if it's an eligible educational institution, which means they accept student aid. So that's from the irs.gov website there. So check that out.
Interesting.
Wow.
Yeah.
Very interesting.
So I just want to share that real quick because we have a lot of people thinking and talking about, hey, my kid's interested in flying. They're hiring again. There's a pilot shortage. So hopefully that's useful.
It is. I think that's useful to a lot of listeners out there. There's a lot of good stuff we're covering on this podcast. It has nothing to do with newsletters. But let's get into it. Before that, though, why is money important to you? Whoa. Do you need help with retirement planning, college savings, tax loss harvesting, estate planning help? Let us know. As fiduciaries, we stand ready to help. We can manage your investments and provide comprehensive planning continuously or on an hourly basis. Give us a jingle at 865-240-2292 or check us out at leadingedgeplanning.com. All right.
Nice work. Hey, you know what, Rob? The best part of that, you got
my voice.
You got the phone number right this time.
Oh, yeah. Nailed it.
I didn't.
Nailed it.
I've had to edit out the phone number every other time until now.
Well,
so if you ever notice
called us very
if you notice the previous podcast where Rob says, and give us a call at, thank you very much. That's because the number was right. And I don't know how to insert the right number into our. Anyway, nice job.
My bad.
Somebody in town
2 corrections. 2 times I've been wrong. Hopefully, Joe's not listening.
Oh, you're right. It's 2 strikes. 2 strikes. MC Hammer.
Okay. Investment newsletters. We're going to cover newsletters' intent, the legal standard they owe to you, and their performance. First things first, newsletters, the intent. Are they for entertainment purposes? Are they fiduciaries? Charlie, what do you got on the newsletter's intent?
Right. I'm going to start talking now, and I'll be done in about 25 minutes. So just want to clarify, newsletters, we're talking specifically about investing newsletters. There's a lot out there. In fact, we say we have a newsletter. But these,
not our newsletter.
Not our newsletter. Our newsletter is truly the best. Yeah. But the newsletters we're talking about today are the ones that say, buy this, sell that, buy this, sell that. You're going to do awesome. And there's a bunch of them out there.
Yeah, so like stock picking or mutual fund picking.
Exactly. Yeah, there's tons of them out there. And I've used some, paid for some before, and some of them are very interesting. But that's what we're talking about today. The intent is to help you to invest your money. Is that a good answer? What do you think?
Well, is it their intent? Sometimes I think you're right. I think other times they're not financial. They're not associated with any kind of controlling entity such as the SEC or a state or anything like that. They're only governed, and I guess we'll get into this in the legal standard, but I might as well cover it now. They're only governed by the First Amendment. They don't have to report what they actually did to anyone. And as a matter of fact, if it weren't for some just nice folks out there tracking them, no one would know what they actually do. So I think their intent is mainly for entertainment purposes a lot of times. And you have to be really careful what you're getting into. There's a lot of money they're making off of you. So you say, oh, they're just $100 a year. No big deal. Multiply that by 1,000, 10,000 people. Obviously, that's some money. So I think it's mainly entertainment for frugal people thinking, and this is going to be harsh, but I'm going there anyways. Entertainment for frugal people. They think they can beat the system by paying $100 or even $1,000 a year to a newsletter that they think is out there trying to do the best they can. And so the intent is they're really a publishing company for entertainment purposes. And I'll even read one of their disclosures. I'm not going to say the name of it, but blank is a publishing company, period. Blank is not a financial advisor, nor is it a financial manager. So that's kind of my 2 cents on the intent. They've done studies. We're going to get into Mark Hulbert, who's the godfather, not to steal your name, but the godfather, the king of newsletter analysis, he's been examining them since 1980. And from his research, they've distilled that even though the newsletters are written and produced by really smart folks that went to Harvard or whatever and have all these different degrees behind their name or letters behind their name, they actually didn't do any better than newsletters produced by Joe Schmo down the street. So anyways, that's what I got. Ben, what do you got?
Yeah, there are many different types out there. I've even seen some for the crypto have been out there now. They'll even give you the what to buy, when to sell. There's some, I know there's a really popular one about options trading. There's some about that. And it's just kind of these groups of people that think they know how to time the market. And as we all know, you got to be right when you're trying to time the market on two things, the buy and the sell. So you may be right on the first side, but when are you going to sell? When am I going to sell my Shiba? I don't know. I'm waiting for a newsletter to come out to tell me. but yeah, the intent behind it is, I guess it's just to make themselves seem really smart and get some clicks.
And full disclosure, we have a conflict of interest, obviously, because if you're buying a newsletter, you're probably not part of leading edge financial planning. So that we're going to say that up front. We have a conflict of interest. Doesn't mean we're wrong.
Right. Yeah, I'm gonna disagree, and I'm gonna get angry. And the reason is because yesterday I was in Nashville, taking my daughter we just went to see a concert. We visited Vanderbilt, and in the hotel, I met this guy and this girl, and they were there to be on the Maury Povich show.
What?
And so they were Maury Povich stars, and he was offering to buy my daughter some snacks, and he's like, "Hey, we're here on NBC's card." So his job was to be on Maury Povich and be the drama guy. And he was a coach. He said he wanted to be a coach to teach people how to be more dramatic and angry on their show. So I'm trying to take the tips that he taught me. But all that's 100% true, except I'm not very good at being emotional and getting angry. But I'll just tell you this. Did you have a question about the Maury Povich show, Ben?
Yeah, I was just going to say, was it about like you are not the father? Is that?
He said we do a really good job of showing our emotions. So we come back on the show multiple times.
Oh, wow. What a career. I love that.
Yeah, he said he makes 50.
Yeah.
If he was to be a coach, to coach other people to be on the show, he'd make $1,500 a week. So that's not bad. Not a bad coaching gig. Just
not bad.
Tell somebody to get angry and start shouting about that baby's not my daddy, the baby daddy. Anyway, sorry. We've really gotten off track. But the point of all that is, I will tell you this. There are some newsletters that have done really well over a long period of time. Okay. However, so have some mutual funds, so have stocks, so have some bonds. No, not bonds. Disregard that part. Mutual funds, any other holdings. So here's the challenge. And this is what Mark Hulbert does. Like you mentioned, Rob, he ranks all these newsletters over time, 1 year, 3 year, 5 years, 15 years. So you can go look at some of these newsletters and go, how well have they done over a 15 years time period? What time period is appropriate? I don't know. What's a good sampling size? Point is, there's some pretty good performers out there, but how do we pick the ones? And if I did pick the right one, would it be a good performer in 3 years, in 5 years, in 10 years? Would it be the same one? It's the same process with investing. There's mutual funds out there. You can go Google the top 15, 20 mutual funds of all time, and they do just as well, if not better, than the best newsletters of all time. So it's interesting that they can produce documentation, some of them, that say we've done this performance for 15 years. But Rob, back to what you alluded to, they're absolutely not advisors. They're not regulated like we are a registered investment advisor, regulated by the Securities and Exchange Commission. So when we tell our client, this is your performance, that number has gone through some rigmarole. That's a scientific word for, there's a lot to that. You can't just tell somebody, here's your performance, which is what the newsletters do. And they compare it. For example, there's one newsletter that caters to our pilots. They'll compare their performance to the S&P without dividends. Dividends make up 20, 30, sometimes 40% of the actual return, depending on the dividends that year. So I could tell you in essence that I'm beating the S&P 500 without dividends and not tell you I'm comparing to something that's not, and that's not something you can actually invest in. Does that make sense?
Yeah, absolutely.
So that's where newsletters get tricky, because sometimes they're good, but how do you pick the ones that are going to be good in the future? Just like picking an investment that's going to be good in the future, you can't know.
Yep. And Charlie, Hulbert we were reading this article where he's got, since 1980, he's been tracking these newsletters. Yeah. And 28 of them, I think, is in the article. He's been able to track since 1980. Of those, only 9 are still around today. Yeah. And out of all of 28, just in general, only 2 have actually beaten the market. Nice. Only 2. So just like you said, are you going to be able to pick those 2 newsletters out of the 28 that were then, and then stick with the program, then not miss an email? What if you miss a newsletter? There goes your tracking.
Yeah, you're right.
You're not going to be sticking to it.
That's exactly right.
What happens This is a great segue into the legal standard owed. When we talk about anything when it comes to money, I think it's important to peel back the layers and peel back the onion a little bit here. The layers of the onion. Is that a proper term?
The onions of the layer.
Yeah, the onion. I'm eating an onion.
What are you
Anyways,
talking about?
there's a lot of layers in an onion. Okay, that's so. When we peel it back and we start looking at who can start a newsletter, like who can be a financial advisor, you have to pass a test in the Series 65, and not that makes you the end all be all by any means, but I think it's important to look at some of those basics and some of the background there. So who can start a newsletter, an investment newsletter? Anyone.
Yeah.
Yes.
Yep.
So I'm going to start a new. Oh, sorry, Ben, you go.
No, I was just going to say, it reminds me of this gambling show that I've watched a few times about sports gambling, and they track their picks, who's doing the best, who's doing the worst. They also have a goldfish that whichever side it swims to, that picks the winner. And it's just as good as anybody else.
Yep.
It's just like that in these newsletters. You just get a goldfish to pick it for you.
Yeah,
Okay,
that's been done.
advice.
That's been done in the world of investing too, where there's I wish I could remember the story, but same thing. So I'm going to start a newsletter, you all, and here's how I'm going to do it. You ready? I'm going to design a strategy that has beaten everything in the last year. I'm going to do some. I'm going to do it right now and go, hey, what would have beaten that in the last year? I'm going to put that out in my newsletter. And then I'm going to put 4 or 5 other newsletters out that are maybe a little different, just in case things are different going forward. And then one of those 5 is going to do really well. And that's the one that's going to survive for the next 5 years. And then I'll design. So go on Mark Hulbert's, I think I'm pronouncing his name correctly.
Yeah, you are.
Look at the newsletters. For each newsletter he pulls up, there's about 5 or 6 of them that are very similar in name and come from the same company. So it's not difficult to design a newsletter that is going to be successful, and then you can tout those returns going forward. The other thing I'm going to do is I'm going to design something that did great in 1 year, and that year is 2008. So that actually happened. In fact, this is Mark Hulbert's article in the Barron's newsletter, September 9, 2009. He says, how should you pick a newsletter? And remember, this is September 9, 2009. We just went through a pretty hellacious, one of the worst besides the Great Depression recessions we've ever had. So you look back, he said, what if I look back at the last 12 months and I get the best performing newsletter of the last 12 months and pick that one? That's a pretty good, right? That'll build you some credibility if you can kick butt during the worst recession we've ever had. But the catch is those newsletters underperform every other time in the market. So they were only successful during 1 year.
And I think that's so important. And the point you made there, Charlie, we hammer this a lot, but it's worth foot stomping again. Past performance does not guarantee future results. When we talk about money managers, there's been tons of studies out there. Here's one that that we've got in the show notes. We'll put in the show notes. The study that was done on this one shows the top money managers in the top quartile, the top 25%, the NIC of the last 3 years, they fell out. 70% of that top quartile fell out of the top quartile, the top 25, over the next 3 years. So if you're picking somebody because they did well the last 3 years, there's a 70% chance they're going to fall out of that top 25%. So even if you found somebody there, the chances of picking someone like that's going to continue to be a top performer is very slim. So I think when you're talking money managers, newsletters, it's all in the same vein there, right?
Yeah. So people say, hey, you're bagging on these newsletters. They're terrible. You guys are awesome, of course. So what is the answer? The answer is that no investor should only focus on investing. Now that sounds weird. Investing is very important, but there are many other things that I think an investor needs to focus on that I believe the newsletter distracts you from. In other words, if I sign up for a newsletter, then I get some sense of control, some sense of I'm doing the right things, when in reality, you're really not doing anything differently than owning maybe aggressive mutual funds. For example, these airline newsletters, they give you a recommendation and they require you to say or pick, are you aggressive? Are you conservative? Are you moderate? So pick one of those. Okay, you pick aggressive and then boom. And I signed up for this newsletter. I evaluated it, looked at it, whatever, because I wanted to know what people were doing and how they did it. So you just pick the mutual funds that are equity, the stock mutual funds. If you're aggressive, that's what you get. If you're conservative, Guess what? You don't pick the equity mutual funds. You pick you pick like maybe 30% equity mutual funds and the rest bond. So you're conservative. So what if I just picked the aggressive mutual funds? You did just as well as any newsletter. Does that make sense? In other words, I'm having to choose. Am I aggressive? Am I conservative? Am I moderate? That's the most important thing to try to understand and know. And the newsletter cannot do that for you. You have to make that selection first. Are you all following me there? I'm probably not explaining that very well.
No, I think I'm going to use their own verbiage again here. When we're talking about this, and it's the publisher does not analyze the suitability of any particular fund or investment approach for individual investors, nor make specific recommendations tailored for individual investors.
There you go. Yeah.
These portfolios have significant risk and are for sophisticated investors willing and able to assume a high degree of risk. And then the next part's nice too. Any and all communications from blank incorporated, the employees should not be construed as personal advice on investments. So any communication from employees should not be construed as personal advice on investments. Although our employees may answer your general customer service questions, they are not licensed under security laws to address your particular investment situation. So I think that's very important that they are not governed by the SEC and they do not have a fiduciary standard, best interest standard. They don't even have a suitable standard. They are just protected by the First Amendment, meaning they can claim almost anything. So some of the best pitches are fantastic. I like this one. Lock in 400% returns. Lock in 400% returns. That's
all you got to do. Lock in.
Yeah. Or this one's actually my favorite. Turn $10,000 into more than $40 million.
Nice.
Wow.
Yeah.
Sounds like
Shibu coin.
Yeah.
Shibu. 847% annualized returns over the past 3 years. And then blank newsletter delivers information you can't get anywhere else.
Yeah.
Nowhere. Wow.
That almost sounds like insider trading, which is illegal. But
I like how they say these are for sophisticated investors. What's sophisticated about that? You know what I mean? That's not.
I do exactly what you tell me. Yeah.
So you did a great job, Rob, of trying to articulate or help me articulate what I'm trying to say. But I'm trying to say that what if I say I want to be conservative in a time and then I miss out on the next 10 years worth of returns because I decided I should be conservative. That's my point is what does that mean? And how do I pick that? That's the most important thing. Here's another disclosure from one of the newsletters that caters to airline pilots. He says, we're not gurus. There's no crystal ball. We don't know where the market is going, but we can tell you what are the best performing funds. A Money Magazine article done in 2014 about these newsletters, because the newsletters were directing people to sell mutual funds, or airline people to sell mutual funds in their 401ks in Vanguard, T. Rowe Price. There may have been another one. They put restrictions on it because they said we do not want this mass exodus of funds, of money from our mutual funds because we can't execute our mutual fund strategy within that mutual fund. You got to have too much liquidity for a mutual fund to execute. So they said no more of that. They cut them off. And they were basically doing these massive trades because of the newsletter. So the newsletter, why is the newsletter so appealing? And this article did a really good job of interviewing some people. I was one of them. They didn't quote me in it. But anyway.
They called you before they called William Bernstein.
So one of the persons they interviewed, I thought, nailed it. She said, all I had before this newsletter was a single index fund. But I always felt like I could do better. I was missing out. I feel like I have more control now. And after, it was talking about American Airlines bankruptcy, the 25-year vet said she needed that sense of stability more than ever. So it's fascinating how, again, and I can understand that. You feel like you want to have some sense of control. And that's a behavioral finance thing. And here is the man, the legend, William Bernstein. He's awesome. He's a doctor and he's a private pilot, by the way. He says, investing, as with flying, our instincts can be wrong, warns William Bernstein, the neurologist turned investment guru who also has a pilot's license. When a pilot comes in for a landing while flying slowly and descending rapidly, the instinct is to pull the nose up, but you actually need to point it to the ground to get enough airspeed to fly again. Investing is the same way. We instinctively react to danger with fight or flight, which is a useful instinct in nature, but all wrong in finance. You should not sell when the fund goes down. You should hold on. And I'll add, buy more of that. I want to buy more when it's down, but nonetheless. So it's really fascinating how it becomes a behavioral issue. You want to get some kind of control, and I can do that for 90, 95, 99 a year in the newsletter. When when there really is, it's just a facade. Sorry to interrupt. I'm done.
No, I was just going to say it ties right into Mark Hulbert's analysis. And one of the most distinct patterns, I guess, they noticed from his analysis in the newsletter monitoring was the inverse correlation between markets and the consensus and the opinions of the newsletters they were monitoring. So they tended to be bullish at or near the top of the market and bearish at or near the bottom of the market, which is just so super
the exact opposite of what you want.
Yeah.
Exactly.
Yeah, and these guys, I don't think we say this enough, or we can't do it justice, but these guys are so good. These newsletters, and a lot of them are so good at copyright and convincing you they know what they're talking about. And some of them are great, absolutely phenomenal speakers. And they're asked to speak at all these financial conferences. And at the end of the conference, everyone's going up and asking them, oh, how do you do this? And I'm going to get in. And meanwhile, I won't name names, but I guess one of them, he's been down, he does an option newsletter, and he's been down 20% a year for the last 15 years, at least when that study was done. And I don't think it's up to date 2021, but down 20% a year. You start off with $1 million, you're not going to have very much after 20% losses every year. Yeah. And when you talk about, I think it's important to talk about option newsletters, which I guess there's quite a few out there. They have a terrible track record, and they sell you on this notion of, hey, you're not going to participate in the downside of the market. And unfortunately, that's exactly what you end up doing, is losing a lot of money. So having a lot of downside.
And maybe we talk just really quick about some of the alternatives to this newsletter, tactic of investing, because we're really comparing this to the markets and what you could get in the market. And not only is there the stress involved and the likelihood that you're going to probably lose money by following these newsletters based on a lot of the studies, you could just get a very healthy return if you're just invest diversely across different asset classes in the markets, and you get the returns of the market. You invest through time, and it's much less stressful than trying to keep up with the next big hit investment and hoping you buy and sell it at the right time.
Yeah. And I think that's important too, Ben, because a lot of these newsletters, you have to do it when they're saying, if you're to capture the gains they're talking about. And if you miss that, say you're flying that day and you don't get to it, you can miss out on whatever theory they're trying to implement.
Yep, right. That's perfect, Rob. You nailed it. That's what I was getting ready to add on to Ben's comment, is those things are really, you got to make this trade now because it's based off of this momentum in these moving averages and whatever. Of course, it's proprietary. The technique that they use, very proprietary.
They don't have to tell you that,
They can't tell you. But it is momentum based on the prices, most recent prices. That's what that person was alluding to. And we know the prices today, and that there's some information in that. However, here's a couple alternatives, Ben, to the question that you raised, which is excellent. What else should I do? I would rather personally do a target date fund if I was looking for something. I think planning is the way to go. I think there's a ton of value in planning and knowing, should I be risky? Should I be aggressive? Should I be conservative? That's the key question. That's the most important question. Like we've talked about before, even with the target dates, maybe I've got a military pension. Maybe I can handle more, be more aggressive, maybe whatever. But the point is, there are other alternatives, Ben. That's a great question.
And I have to throw in, because there's a lot of scholarly debate on, you made it sound, Charlie, I'm going to throw you under the bus, that momentum is something you can capture. And there's a lot of scholarly debate that you cannot do that efficiently. But I just wanted to foot stomp that. Yeah. There's a lot of people say you can't do that in momentum. And also, that's if your newsletter is actually prescribing to that theory and trying to do that. Some newsletters are, I guess there was one back in the day that literally said they were getting their investment advice from God. And that's who they were getting.
Wow. Dang.
So that's, I know. Turned out not to be true, but
we shall see.
They can claim anything. Yeah.
You're right, though. Just to be more specific about the momentum factor, sometimes that's what it's called, is dimensional fund advisors will say that we cannot capture that factor. We can't get that premium because it costs too much to just wrap up in a mutual fund. In other words, dedicate an entire fund to that. Because of the expenses, it negates the benefit of the momentum factor. BlackRock, or iShares does have an ETF. They tend to put stuff out there where if somebody wants it, they put it out there. That's just how they're different than dimensional. So you're right. It is definitely very debatable on how to capture that.
And it's just, and the other thing about these newsletters, and I know we've said it, but these people are not registered in any way, shape, or form. They don't actually manage people's money. They're not allowed to, or else they wouldn't be able to do these newsletters and say these guarantees. When you could invest in an active ETF, actively traded mutual fund that's run by a manager, a fund manager that has all the certifications, that is regulated, and they probably have a lot more knowledge than the newsletter people. But just another alternative.
That's a good point, Ben. And I think we've thrown a lot of numbers out, but one that I think is easy for people to realize is you have a 1 in 7 chance of picking the newsletter that will outperform the market. So you do the math on that one. You got a 1 in 7 chance of outperforming the market, or there's the opinion you just try to be the market as best you can. Or factor investing or whatever. But Mr. Jaffe from the Wharton School of Business and James Mahoney from the Federal Reserve Bank of New York, they came out with a study a while back that concluded, taken as a whole, the securities that newsletters recommend do not outperform appropriate benchmarks, period. So that was a quote directly from it. I know
it's like a mic drop right there. Yeah.
I love it. I know we got more on this. Charlie, what else you got?
I think it's a behavioral thing. I really do. And I think it's like that quote earlier. We feel a little bit out of control. We want to have some control. We want to do something. We want to feel like we've earned that passive income. There's some science behind that. In fact, Dan O'Reilly, one of our favorite behavioral finance economic professor out of Duke, says sometimes when feeling out of control, we reach for a narrative that will help us. We don't like randomness, he adds. We try to force order on life around us, so we tell ourselves a story. And that story is that if I subscribe to this newsletter, I'm going to do better, when in fact, you can do okay. It's just that like you can do okay with a lot of other things too, like such as a target date fund or buying the most aggressive funds in your 401k. But anyway, I'm done.
You can do okay, but I think it's so interesting that the publishers of these newsletters, you only hear about their wins, and they are geniuses at hiding their losses. And only research like Hulbert is able to point out their losses. Yeah.
Very good.
All right. I think that's it. You guys got
That was fun, man.
Else?
That went by fast.
That was a good one.
I think our training from the Maury Povich show paid off.
Can we get an emotional advisor?
That was intense.
Drama.
I was hoping we were going to come up with our own newsletter during that whole thing.
Actually,
you started to talk about it.
That's a good point. Ours is boring. Ours is boring.
Yeah, but we can name it something good. One of a kind, first in class, retire next year.
Best ever, guaranteed.
Best ever.
Lots of guarantees in our newsletters.
Lots, just tons. All right, that's it. A couple of quotes to leave you with from Charlie Munger. Here you go. You don't make money when you buy, and you don't make money when you sell. You make money when you wait. Oh, boom.
Charlie, he always knows what to say.
Yeah. Second one, those who keep learning will keep rising in life. All right, that's it. We've arrived at our final destination. Let us be the first to welcome you to the end of Flight 19. Thank you for joining us here at the Pilot Money Guys podcast. If you have any questions or would like us to answer anything you have about the show, shoot me an email, robert@leadingedgeplanning.com. Sign up for our newsletter. You go to leadingedgeplanning.com. We're going to have a link on there. And let me know if we don't. I think we do. If you liked what you heard, hit that subscribe button so we can reach more people. And remember, as Emerson said, the world makes way for those who know where they're going, so plan accordingly. From all of us here at Leading Edge, this is October 29th, so we're going to say Happy Halloween. You're not going to hear this till afterwards, but Happy Halloween anyways. Bye-bye.
Bye.
Thank you for listening to the Pilot Money Guys podcast. It has been our pleasure to share some information with you today. Give us a call to discuss absolutely any investment question you may have. Click on the subscribe button below to be notified when new episodes become available. Visit leadingedgeplanning.com to learn more. Take care. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Leading Edge Financial Planning, LLC. Leading Edge Financial Planning LLC, Leading Edge, is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge and its representatives are properly licensed or exempt from licensure. The information provided is for educational and informational purposes only and does not constitute investment advice and should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-thinking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment plan.